A school teacher earning $50,000 a year can pay a higher tax rate than a billionaire. Not a higher amount, a higher rate. And here's the part that should bother you. The billionaire isn't cheating. He isn't hiding cash in a briefcase or a Swiss vault. He's following the rules exactly as they're written. Rules most people never even know exist. So this isn't a video about tax fraud. It's a video about the perfectly legal machine the wealthy use to turn a billion-dollar fortune into a near-zero tax bill, and I'm going to draw it for you, piece by piece. By the end, you'll see why there isn't really one tax system. There are two. One for people who earn money and one for people who own it. And you'll see exactly which one you've been standing on your whole life. Once you see it, you can't unsee it. Start with the word that runs your entire financial life. Income, your salary. The moment it's earned, before it even lands in your account, the government has already taken its slice, withheld automatically at the source every single paycheck. You are taxed for the act of working instantly, and there is nothing to avoid because the money is gone before you ever touch it. Now draw the billionaire right next to you and ask the simple question, what's his salary? For many of the richest people alive, the answer is almost nothing. Famously, some take a salary of $1 a year. Not as a publicity stunt, as strategy. Because a wage is the single most heavily, most instantly taxed kind of money there is. So the people who get to write their own paychecks simply choose not to take one. So if not a salary, where is their money? It's in assets. Stock in the company they built. Real estate, shares, stakes, ownership. And here is the first crucial rule of the machine. The one everything else is built on. An asset is not taxed when it grows. If you own a stock and it climbs from $1 million to $1 billion, the law does not see a single dollar of income, not until you sell. That growth has a name, an unrealized gain. And as long as it stays unrealized, as long as you simply hold and never sell, it is completely invisible to the tax system. So picture the teacher's paycheck, taxed before she ever sees it. Then picture a fortune growing by hundreds of millions a year and triggering exactly zero tax for as long as the owner just doesn't sell. So he doesn't. But that creates an obvious problem, and this is the exact spot where most people assume the rich must finally pay up, because money locked inside stock isn't groceries. It isn't a yacht or a jet or a mansion. To actually live, you need cash in hand. And the normal way to turn stock into cash is to sell it, which is the one move that finally trips the tax. Sell $1 billion of gains and you might owe the government $200 million in capital gains tax. So if the wealthy had to sell to fund their lives, the machine would break, and they'd pay just like everyone else. Which means this whole thing comes down to a single question. How do you spend your wealth without ever selling it? And the answer is the quiet center of this entire video. You don't sell it. You borrow against it. That's the move. That's the whole secret in 3 words, and we'll get to all 3. A billionaire uses his stock as collateral for a loan, or rather, the bank comes to him because to them, he is the safest borrower on earth. The stock never gets sold. He keeps every share, keeps all of its future growth, and the bank simply hands him cash against it. Millions, tens of millions, whenever he wants it. And here is the magic word that makes the entire machine run. A loan is not income. Borrowed money has never been taxed anywhere because it isn't earnings. It's debt, money you owe. So now he is holding spendable cash, completely tax-free, while the assets behind it sit untouched and keep climbing. The teacher earns her money and is taxed. He borrows his and isn't. Same lifestyle, 2 completely different tax bills. But he still has to pay interest, you might say. And he does. So look at the numbers from his side of the counter. The bank charges the ultra-wealthy rock-bottom rates because the loan is backed by rock-solid collateral. Say he pays 3 or 4%. Meanwhile, the stock he refused to sell is climbing 8, 10% a year. So he is borrowing at 3 to dodge a tax of 20, while the asset behind the loan grows faster than the loan ever costs him. He isn't losing money by borrowing. He's making it. The loan is cheaper than the tax, and the asset out-earns the loan. Read that twice because That single gap is the engine the entire fortune runs on. So how does he ever pay the loan back? Often he doesn't. Not really. When one loan comes due, he takes out a new one against assets that are now worth even more and uses it to cover the old one. The debt just rolls forward year after year, always small next to the growing mountain of stock behind it. He isn't climbing out of debt. He's surfing on it, and the wave keeps getting bigger underneath him. For a regular person, debt is a weight that sinks you. For the very rich, structured like this, debt is a tax-free salary that never has to be earned, which leaves exactly one problem: the only deadline this machine can't refinance its way around: death. The loans are still sitting there. The tax on a lifetime of gains has only been delayed, not erased. So surely when he dies, the bill finally comes due. And this is where the machine performs its most elegant trick of all. When he dies, his heirs inherit those assets, and the law resets the value of everything to whatever it's worth on the day he dies. It's called the step-up in basis. All that growth, the entire climb from 1 million to 1 billion, the gains he borrowed against for decades and never paid a cent on, in the eyes of the tax system, it simply vanishes. The slate is wiped clean. The heirs could sell the very next morning and owe almost nothing, because on paper there's no gain left to tax. The estate quietly settles the loans, and a lifetime of untaxed growth passes down to the next generation, scrubbed of its tax bill at the precise moment everyone assumed it would finally be paid. Buy, borrow, die. 3 words, and now you can see all 3. Buy assets that grow untaxed. Borrow against them to live tax-free. Die and let the gains reset so the tax never arrives at all. It isn't a loophole somebody snuck in at midnight. It's the predictable result of 3 perfectly legal rules, stacked one on top of another. Each one reasonable on its own and quietly devastating in combination. And it runs out in the open with the help of the best lawyers and bankers that money can buy. And what I've drawn for you so far is just the spine. Hang more on it and it only gets stronger. The sliver of income the wealthy do take is often structured to count as capital gains, taxed at a far gentler rate than the wages sitting in your paycheck. Assets get tucked into trusts and foundations, sliding to the next generation while stepping around the estate tax that was designed to catch exactly this. Giving to charity buys a deduction that shrinks the tax on whatever's left. Every layer is legal. Every single one bends in the same direction, and not one of them is available to a person whose only asset is the next paycheck. So step back and look at the whole board, because here is the truth it's been building toward the entire time. There isn't one tax system, there are 2. The first one taxes income, money you earn by working, and it is ruthless, automatic, taken before you can even blink. The second one taxes wealth, money your assets make just by existing, and it is gentle, optional, and easy to delay until it quietly disappears. You have spent your whole life on the first system. The rules of the second were written for, and very often by, the people who live on it. The real question was never how hard you work. It's which system your money lives in, and that reframes everything. The system isn't broken. It's doing exactly what it was built to do. It taxes labor heavily because labor is easy to catch. It shows up, named and dated, in every single paycheck. It taxes wealth lightly because wealth is patient, mobile, and helps write the rules. You were never being singled out. You were just standing on the side of the line where the money is easiest to reach. The teacher pays more than the billionaire, not because she earns more, but because she earns it all. Now let me be straight with you. Almost none of this is a move you can copy on a Tuesday afternoon. Most of it needs a fortune just to switch on, and I am not handing you a tax scheme. I'm handing you the blueprint so you finally understand the game that everyone else has been playing without you. But the logic at the very bottom of it isn't only for billionaires. The shape of it, letting assets grow instead of chasing taxed income, holding instead of selling, using the ordinary accounts that were built to shelter growth from tax, that shape is available to regular people too, in smaller, legal, everyday forms. The wealthy didn't find a secret door that you can't. They just understood far earlier than the rest of us one simple thing, that owning is taxed differently than earning. And once you can see that, Once you can finally see the machine, you stop being the part of it that always automatically pays first. So stick around, because next we'll draw where a huge share of all this borrowed, untaxed money quietly flows into real estate, and why the tax code treats a landlord so much better than it treats a worker. See the machine. Don't be the fuel.